Hello and welcome to TA for Traders. I'm Nigel Croft. Well, here we are. It's Friday the 9th of June, the day after the UK election. What a night. I managed to stay up until 4:30. You can probably tell by all the bags under my eyes. Anyway, let's have a look at the charts on the pound against the dollar. And obviously the pound has been hit. Let's have a look. What we'll see is that I was hoping the 20-day moving average was going to push sterling higher. Obviously, we've fallen below the 20-day, and we've fallen below a key support at the 128. That now becomes resistance. However, there is support coming in at just below the 126 on the 200-day moving average. I would say the jury's still out on sterling, but let's have a look at the charts and you'll learn more. Thank you. So here we have the daily, and you can see that, sorry, I'll turn off the cursor. You can see that we've fallen below the 20-day and the 50-day moving average, but the red line, the 200-day, should give support 125.89. It is moving down, so the amount of support it gives will be reduced because of that, but it is still a level that traders will be watching. We also fell below the 128 level. That had been a support, so that will act as resistance on the upside. You probably can't see that clearly. Let's focus in on the recents. There we go. So you can see the levels more clearly. See the 20 and the 15 200. You can see that the RSI did dip below 50 on the fall. 39.71, so that is indicative of negative momentum, and you can just see that the MACD as well have diverged to the downside and indicating negative momentum. What would you expect from a chart like that? Really, one would expect further downside, maybe drift towards that support at the 200-day. These moving averages, the 50 will roll, but it will take a time to roll. So let's go back on the bigger picture. You'd expect drift around this level. There is strong support on this trading range that we had, the old trading range between 127 and 122 to find support in there. Most likely. On the longer term picture, here we're looking at the weekly. You can see that we did go down to the rising 20-week moving average, and we have bounced today. The 50-week is moving down, and we may trend down with that in the medium term. Here the RSI isn't below 50 yet, it's down at 51.31, but as we go into next week that will probably tick down further. The MACD are flatlining. On the shorter term picture, here you've got the 4-hour chart. Quite interesting. We may just have had a double bottom and a non-confirmation on the RSI. The tick down on that 4-hour period where we reached the low 120, just below 126.50, was actually the RSI was slightly higher than it was on the initial sell-off when those exit polls came out. That could be the first signs of a slight recovery. Any recovery, as I said, will find resistance at 128, and then as you can see, we are then going to hit the downtrend in 20 and 50 moving averages, which are around about 129 or just below. So quite interesting that there could be sign of a recovery on this 4-hour RSI. The MACD are negative. So let's have a look at the support resistance levels. As I said, the 128 does come in as resistance. Above there, this is on the daily, 129.783. 130.426, with a support at the 200-day 125.89 and 125.15. So that's been TA for traders, having a look at the sterling against the dollar the day after the shock result from the UK general election. I hope you found the video of interest. Obviously the picture has changed for the negative. In the very short term, the 4 hour is possibly indicating a double bottom on the RSI and a non-confirmation. If that's the case, we could see a push up over the next few hours towards that 128 where there is short-term resistance. Thanks for watching. Please remember these videos are for educational purposes only, and they're not meant as an investment recommendation. Thank you.